Good afternoon, traders. I should say good morning, traders. Welcome to today's Outlier Live. We'll cover the biggest headlines today and what the AI trading data has to say about it. And we have 5 big stories to cover today. So let's jump right into the first one. Costco price hike. Popular items are seeing unexpected jumps in cost. I was actually at Costco just yesterday grabbing a few things. Let me tell you a couple of things we like to get. We like to get paper plates there. Those are great. Get a whole buttload of them for like $5. I like to get sodas there, Coke Zero and Diet Dr. Pepper. I mean, you can get the same, you can get like 35, 36 cans for what it costs to get like 24 at Walmart. So it is definitely a way better deal to go over to Costco. But they're having a huge price jump. But the hot dogs will stay $1.50. I even actually had a hot dog yesterday. I wish they had better options in the soda department, but it was half of the low cal lemonade and half of their like Sierra Mist knockoff there. But either way, yeah, love me a $1.50 hot dog. Good morning, Brian. Thanks for watching live. So Costco price hike. Let's see what some of the things that are getting the price hike this weekend here. Membership fees may see an uptick in price. Could be anywhere between $5 and $10. The company reported its total cardholders increased to 132 million people, a 7% increase over the same period a year ago. But I'll tell you what, we have 2 Costco's really close by. And one of them we go to more frequently, but this yesterday when I went, I went to the busier one of the 2. Oh my gosh, it was a madhouse in there. I couldn't walk around. I was so frustrated. There were so many people and like just clogging up the aisles in every direction, which is great for Costco sales, and maybe it's going to reflect in the Costco stock price. But I got to tell you, Costco is not hurting. Costco is not hurting for people there, which makes sense because if we are seeing a pullback in the economy, if we're seeing recessionary forces, which I believe we are, where are people going to go to save money? They're going to go to Costco. You're going to see those lines for gas that are wrapped around 100 cars deep. You're going to see the lines inside of Costco to check out being 100 people deep. You're going to see the aisles loaded with people. And even if they do have an increase of $5 to $10 on their membership, I don't think it's going to dissuade people from going there. Let's see what else we have. When we do our competitive price shops on gas, which we do weekly at every gas station, our value proposition is actually increased number of cents per gallon that we've seen. So that's a win-win for us. So Costco's gas is actually even outpacing everybody else. That's why there's those huge lines there, right? Some deflationary items were as much as 20 to 30%, and again, mostly freight related. Let's see. Some items like furniture and other lower price bulky items may start falling in price due to reduced freight costs. All right, let's go. The $1.50 hot dog's not going anywhere is what they say. Let's see. Last month, retailers is now selling kimbap, a dish similar to sushi at competitive prices. You get 6 kimbap for $18, making it slightly cheaper than Trader Joe's, it looks like. That's cool. Solid 8 out of 10. We'll be definitely getting it once it gets back in stock. Well, what are people all upset about here? Is it the membership fees or something else? Let's see. It says that Costco gas tends to be 30 to 50 cents cheaper than everybody else. Price increase on extra virgin olive oil. Really? We're having this whole article about the price increase on extra virgin olive oil? I think that's exactly it. I think that is exactly what this entire article is about. Because they're saying the $1.50 hot dog's not going anywhere. You're saving even more on gas compared to everybody else. Memberships might go up $5 to $10, and olive oil increased a bit. Really? People are getting all upset about that? Give me a break. Let's go take a look at Costco stock price, though, right? We can see it's actually been on a bit of a tear lately, right? Going from a low of around 543 all the way back in October to lately, it's been up as high as almost $800, right? In fact, we got a buy signal on Costco on April 16th. So Costco has been on a real tear lately. And in fact, if we look at the performance summary here using the outlier buy and sell signals you see on the screen, shows 142.33% returns. Those are pretty awesome returns there. So realistically speaking, I don't think these small increases in prices, wherever they may be, are having an impact on Costco, the company. As we can see right here, the stock price is not slowing down anytime soon, but they continue to outpace on gas even more, is what they're saying. And the buck 50 hot dog's not going anywhere anytime soon. You know what else is not going anywhere? My daily email newsletter. I want to send you a copy of this every single day, 100% for free. All you got to do is head over to freeaitrades.com, and I'm going to send you a daily newsletter with my buy and sell signals. So you definitely don't want to miss out on that. Let's go take a look at what the internet has to say about this, right? Gas prices have quietly increased along with olive oil. That doesn't jive with the article we just read. The article we just read said gas prices, the spread on them compared to everybody else is even better still. But Costco's buck 50 hot dog isn't going anywhere. Let's see what people have to say. Best deal on food anywhere. It oddly appears Costco isn't having any issues in this economy as the warehouse are packed with members. Exactly what I said. MVP for the hot dog soda combo. Getting harder and harder to live. Gas rose like 2 cents. Fancy mustard is gone. Choice of Polish sausage is gone. Onions disappeared for a long time. Prices actually increased. You're a membership store, not a increase my price at the expense of my membership store. Okay, they didn't write that very well. Well, I can't afford groceries or gas, but I can walk to Costco for a hot dog. That sounds about right in this economy. If you are getting Social Security, right? I doubt that I will actually see any Social Security, even though I'll pay for it for the rest of my entire life. But if you're getting some of it, I'm happy for you because it's probably going to be all gone by the time I get there. Social Security recipients are on track to receive a cost of living adjustment next year. It's bigger than previously expected as inflation remains uncomfortably high. Okay, that's where this article is going. I saw this. It must have been last year around this time. It was hilarious. It was Joe Biden. He went out and made a big old press conference about how much they're raising Social Security, how awesome his administration is for raising Social Security. Joe Biden is the greatest president of all time because he got to raise Social Security for all those who are on it. And then a fact check came out on it and said Social Security cost of living adjustments are tagged to inflation. Joe Biden is basically bragging that inflation is at its highest rate under his presidency because he's trying to take credit of the fact that the cost of living adjustments are going up. So therefore, the raise you get is all inflation based, and Joe Biden wants to take credit for that. That's Bidenomics at work right there. This person estimated the adjustment could be about 3.2%. Let's keep going here. The Social Security change is calculated based on the Consumer Price Index, right? That's exactly what we're talking about here. So when Joe Biden comes out saying how he's the greatest president ever, how he's raised Social Security the most ever, that means that he's screwing everybody else in the meantime. Social Security beneficiaries could see 3.2% increase in their monthly checks next year. It was a steep decline from 2023 when they saw an 8% bump. So they got an 8.7% bump last year, and now it's another 3.2%. That's what they're saying here. And so that's why Joe Biden was so excited. Hey, we're going to raise this on everybody. Everybody gets more money, except everything costs so much more. Brian says the old people will not allow it to go away. They vote, and when you get to that age, you get to keep it. He got a raise due to inflation. Yep. An increase of that magnitude would raise the average retirement benefit of $1,900 by about $61 a month. Man, $1,900. You're supposed to live on $1,900. That's less. That like there are so many people who can't even pay rent, just the rent for $1,900. Yikes! Inflation indicates that consumers are still experiencing an erosion in buying power. Yeah. And it says they'll release the final adjustments in mid-October. Let me know in the comments down below. Do you actually think that you're going to see any of it? Brian says there's no way it's going to go away anytime soon. Let's take a look at what I was thinking about. What stock would an old person like to get into, right? Definitely throwing some, what is the word I'm thinking of? It's not prejudices. It's, what is the word I'm thinking of? Stereotypes, yes. Stereotyping the old people. What stereotype would they like? I think they'd like gold. Let's take a look at what the price of gold, which is Barrick Gold Corp, has done lately, right? We can see in the last few months, it's gone from a low of around $14 or so and climbed a lot. And now we're seeing it right now with the buy signal at around close to $18 or so, right? So about from 14 to $18. That's a nice raise. How much is that? 4 over 14, about 28% increase in the last few months, right? So now might be the time to load up on some gold if you're interested in that. We did just get a buy signal on May 16th. And in fact, oh, check this out. Following these buy and sell signals shows a 49% using these buy and sell signals here, but a buy and hold return of negative 1.14%. So you're actually losing money if you're buying and holding, but you're up 49% when following these buy and sell signals. So that makes it pretty easy right there. Be sure to head over to outlier.com. But before you do, I want to send you my AI free newsletter, free AI buy and sell signal newsletter that I send out every single day. The way to get that is at freeaitrades.com. And you don't want to miss out on this, right? Let's go see what the internet has to say about this, right? Seems like a good idea for Biden and the Democrats to propose legislation to repeal taxes being taken out of Social Security. That was a Ronald Reagan thing, and Joe Biden should undo it. Thoughts? Hang on. So, so are they taxing the Social Security? Is that what he's saying? Or are they not taxing it and they need to? Propose legislation to repeal taxes taken out of Social Security. That was a Ronald Reagan thing, then Joe Biden should undo it. Oh, so Ronald Reagan had them start taxing Social Security? That is kind of shit. I don't think people need to be having their Social Security taxed. Already did what I suggested. The Democrat from Minnesota legislated repeal Social Security taxes in January. Let's lift the Social Security tax. Okay, let's take a look at this. New legislation to eliminate federal taxes on Social Security benefits. That makes total sense. Yes, we definitely need to do that. I assume you mean repealing any portion of Social Security being included in taxable income. That would be a good thing and politically meaningful. Yeah, it definitely would be politically meaningful. Since it's something that the press doesn't consider a car wreck by the side of the road, enough people report on it. Yes, Biden Dems need to shout this. Okay. Yes, and pay for it by raising the cap on the income subject to FICA withholding. Absolutely ridiculous that we're paying taxes on Social Security. We worked hard our whole life. Social Security barely keeps us afloat, and they want to tax us. Ridiculous. Yeah, I kind of agree with that person there. Let me know in the comments what you think about this. Well, I'll tell you what. Anytime my wife pulls out her credit card and makes a big purchase, I always say, "Man, I hope that thing doesn't catch on fire." But I think a lot of people's credit cards are catching on fire lately, as credit card debt is surging. The average American owes at least $6,000, maybe even more. Consumers owe a collective $1.02 trillion in credit card debt. That's outrageous how much that is, right? Americans are racking up more credit card debt as they continue to battle high inflation and interest rates. I'm doing some consulting with a financial institution in a couple of days, and this is one of the topics that I want to talk about here. How Americans are so strapped they can't afford their normal day-to-day lives, and so they've been putting it on the credit card. At some point, the credit cards are going to max out, and especially when you consider that the credit cards are 20, 25, 30+% interest rates, people are going to hit a brick wall in a very ugly way very, very soon once those credit cards hit their limits. And when they do, they can no longer keep up with their lifestyle. They definitely don't have any money in the savings accounts. And people are going to just say, okay, that's it. I can't afford it anymore. I'm cutting it off. And when we do, I think that could be the final straw that breaks the economy's back, right? We're struggling. We've been struggling for ages in the economy. But those in charge want to tell you that when people are racking up credit card debt, that means the consumers are healthy and strong and they're excited to go spend money. But we know the case, right? When groceries went up 20, 30% over the last few years, but your income maybe has gone up 3 to 5% over the last few years, where are you going to still pay for groceries with those swipes on the credit card? Man, it's you look at the story and you can just see the writing on the wall, but the media doesn't want to cover just how bad things actually are out in the economy, right? New data published on Thursday by TransUnion showed the average debt per borrower hit $6,218 at the first quarter, an 8% increase from 1 year ago. As consumers manage expenses amidst stubbornly high inflation, demand for credit continues to be strong despite the currently relatively high interest rates. Tell you what, this is a dire situation, and I don't think many people are going to come out on the other side of this in a good way. In the first quarter of 2024, credit card and auto loan transition rates into serious delinquency continue to rise across all age groups. Yeah, Not only can people not afford their lifestyle, they're not able to afford their credit cards anymore. An increasing number of borrowers are missing their credit card payments, revealing a worsening financial distress among some households. Could be that consumers drain the excess savings. I know for a fact consumers have drained their excess savings. They built up during the pandemic and are still spending at all-time high levels. Like I say, I do a lot of consulting, and you can see the excess balances that happened during COVID. They're gone at this point. At 9 out of 10 institutions I see, they are at or below the balances that they were pre-COVID. So there are no more excess deposits. Let's take a look at the price of Citibank though, right? I have a Citi credit card. I think the Costco credit card is through the Citibank, right? And you can see that the price of Citicorp, has grown from around $38 a share to now we're looking at $62 a share. Wow, it's nearly doubled in the span of a few months here. And if you're looking at it from a perspective of how is the company going to be performing, right? We've seen interest rates go up, which means that they, as a company, are able to loan out their loans at higher interest rates, which means they make more money. We've seen interest rates go up, which means that the investments that the institution makes, they're going to be making more money on. And we've seen interest rates go up, meaning that overall, the banks should be doing better than they would be otherwise. And maybe that's reflective in the stock price here, right? We did get a buy signal on April 29th on Citibank, and it's definitely on its way up right now. And you can see OVTLYR showing a 20.54% return following these buy and sell signals, where buy and hold is down 17%. So you don't want to miss out on those. You definitely want to be taking a look at Citigroup right there with OVTLYR data. And you don't want to miss out on my free newsletter, right? My newsletter every single day, I will send you free buy and sell signals from our artificial intelligence data here. All you got to do is head over to freeaitrades.com and I'll send you emails like that every single day. Let's take a look at what the internet has to say about this. The US now has a record 17 trillion in household debt, 12.4 trillion in mortgages, 1.6 trillion in auto loans, near record 1.6 trillion in student loans, near record 1.1 trillion in credit card debt. Total mortgage debt is more than double the 2006 peak. Total mortgage debt is more than double the 2006 peak, and total credit card is up 50%. 50% since 2020. In Q1 2024 alone, 9% of credit card balances and 8% of auto loans transitioned into delinquency. I know that doesn't sound like much, but that is huge. That means 1 out of every 10 credit cards is behind. 1 out of every 12 of auto loans is behind. That is huge. That means as you're driving down the road, 1 out of every 12 of those cars is not able to keep up on its auto loan payments. Higher rates are taking their toll on consumers with record high debt balances. How much longer can consumers hold on? This is what I've been saying. This is my current bearish thesis on the economy right now. We are digging deeper and deeper and deeper into debt, and there will be a point where the debt wall hits us right in the face, and then the economy will start to pull back hard and fast. Let me know what you think about that in the comments. Home Depot co-founder rips Biden apart for his absurd claim over inflation. President Biden makes second incorrect claim on inflation when he entered office. Okay, let's take a look at this. Let's see what this Home Depot co-founder has to say, right? A prominent business leader and one of the Republican Party's top donors didn't mince words when reacting to President Biden's now repeated incorrect inflation claim. Why do liars lie? Because they lie. That's why you call them a liar. That's the most absurd remark in the world to say that inflation was 9% when he came in. It was 1.4%. This is actually a fact. I don't know if they're going to show a stat here. I wish they did have the chart right here. But when Biden took office, inflation was at 1.4%. It was in 2022, I believe, when inflation hit 9%. So 2 years deep into his presidency, that's when inflation hit 9%. But now he's going out on the campaign trail saying, oh, no, inflation was 9% when we came into office, and we have brought it down. We have been hammering inflation down day after day, year after year, but it's just not the case. The U.S. Bureau of Labor Statistics reported in January 2021, the same month as he took office, CPI increased 1.4% year over year, thus serving as a fact check on the president. How can you believe them? The numbers speak for themselves. Think of all the things that have no bias in fact, none. Biden made the same claim on CNN, who, like Yahoo Finance, did not challenge the falsehood. No president has had the run where we had in terms of creating new jobs and bringing the inflation. It was 9% when I came into office. 9%. That's what Joe Biden said. And everybody knows that that's not the case. It was 9% while you were in office, my friend. 9% that you oversaw. But yet, you want to blame everything on the bad orange man, right? Blame everything on the bad orange man because inflation is out of control due to his fault. It's all his fault, right? It has nothing to do with the last few years, right? Let's take a look at Home Depot's stock price, right? So this is an article talking about the Home Depot founder. What is going on in the stock price? We can see a low around $281 back in October. We got a buy signal right after that, and then a sell signal came at 338. So that was a decent move, right? From 281 to 338. That's like $50 a share. And then right now we're seeing prices around 347. So lately, the stock price has definitely been on a little bit of a sideways move. But following these AI signals here, you'd have seen a 41.69% return, which is not too shabby at all. So I don't want you to miss out on these AI trading signals that I send every single week. Be sure to check your inbox, right? Go sign up at where's the button here? freeaitrades.com. That way I can send you emails just like this to your inbox every single day. freeaitrades.com will allow you to get that. Buy and sell signals sent to your inbox every single day. Now let's move on to see what the internet has to say about this. Hammering the point. The Home Depot co-founder didn't mince words when he reacted to the president's inflation claim. The business leader explains why numbers speak for themselves. This person says, stopped. Yeah, inflation's hitting everyone hard. The numbers don't lie, and it's affecting everyday life. Groceries, gas, everything is more expensive. It's super frustrating. Yeah, no joke. The only man who can make America great again. Let's see what the internet has to say. The data is readily available to anyone. That's how I know it's 3.4% today. Lowest in 3 years and almost a match to the average percent over the last 40 years. This person's straightforward response underscores the significance of economic data to assess inflation concerns. And at the end of the day, inflation, it just needs to get better. Let me know in the comments what you think. This stat kind of bothered me. The inflation costs on the national debt just surpassed spending on defense and Medicare. For the first 7 months of 2024, spending on net interest surged to $514 billion. You ever heard of a debt snowball? Right? The debt snowball is where you start paying on the the lowest balance, right? Let's say you have like 6 credit cards. Make a round number. Let's say you have 5 credit cards. One of them's a $100 balance, 300, 500, 1,000, whatever. Start paying on the lowest one, and let's say you paid off that $100, and then you roll that $100 payment you were making onto the next one. And then you've rolled off the 100 and the 200. Then you roll it on to the next one. So you've rolled off the 100, 200. Now you're putting 300 into the next one, right? So you're making a snowball in order to pay off the debt faster. But the US government seems to be doing the opposite. The US government snowball seems to be rolling down the hill right at them. And they're like, oh my God, they're going to roll us over. And that's exactly what's going to happen, right? When you are spending more on interest costs, just the interest costs, versus all of your defense, all of your Medicare, you've got a huge problem here. There is a giant, giant fiscal problem in this government. Interest payments on the nation's ballooning debt just eclipse spending on defense and Medicare. Worrying policy experts that have warned the U.S. This threatens to undermine U.S. economic stability. Yeah, you freaking think? Interest payments on, hang on here. Just reloaded. The first 7 months of 2024, which began October, spending on net interest, come on, quit loading, surged to $514 billion, surpassing the spending on both national defense at $498 and Medicare at $465. In fact, interest costs have topped spending on veterans, education, and transportation combined. Rising debt will continue to put upward pressure on interest rates. Yeah, without reforms to reduce the debt and interest costs will keep rising, crowding out spending on other priorities and burden future generations. We've all seen it, that the government basically says, we're just going to pass the problem off to the next person in line, right? We're just going to kick the can down the hill. That's what they always do. The Fed raised interest rates 11 times in the last couple of years, lifting it to the highest level in 23 years in an attempt to crush inflation and cool the economy. Well, we're definitely seeing cool the economy, but we've not seen crush the inflation just yet. Policymakers have signaled they'll hold interest rates at elevated levels until they are certain inflation is conquered. Spending on interest now is the second largest line item on the budget and is expected to remain high for the rest of 2024. By 2051, it's projected to be the most expensive part of the budget. Well, that's awesome, right? That's what we have to look forward to. Um, I don't I can't think of a great example, but I mean, just imagine for a second, right? The most expensive thing in your life is not your mortgage, is not your car payment, is not maybe the gas or electric or whatever your bills are, but just the interest. How demoralizing is that, right? When you think about, oh man, I've racked up so much credit card debt that the most expensive thing in my entire life is just the interest on that. How are you ever going to get out of that hole that you dug? Welcome to the United States of America. That's what our government has here. Let's take a look at L3 Technologies. All right. So I picked this one because it was talking about the interest costing more than the defense budget. And L3 Technologies is one of those defense contractors that's definitely been helped a lot lately with all the stuff that's going on out in the world, right? They're definitely being helped. We saw a low from about $163 a share to now with everything that's going on, right? All these wars and funding and everything else for every other country in the world, it's seeing a high of 215. So from 160 to 215, so about $50 a share. That's pretty outstanding. In fact, we got a buy signal not too long ago on April 25th when it was around 207, and now it's at 215 or so. So it's definitely on its way up. Now let's take a look at what the performance summary shows. OVTLYR showing a buy and hold at not buy and hold, but the outlier signals at 45% versus buy and hold at 12%. Right. So you're definitely outperforming buy and hold whenever you're using these outlier buy and sell signals right here on the chart. Now, I want to send you the buy and sell signals every single day, 100% for free. All you got to do is head over to freeaitrades.com and then you can get on my newsletter and you can get these buy and sell signals like I've been talking about all day long. You'll get them sent straight to you. So make sure you head over to freeaitrades.com. You don't want to miss out on this. And let's go see what the internet has to say about this. Out of control, why policy experts say scary numbers are threatening the American stability. Interest payments on nation's debt just eclipsed defense and Medicare. Thanks to the $8 trillion added by the deficit Trump and the Republicans. Right. Let's be realistic here. It's everybody's fault, right? I don't know when the last time we had a balanced budget, maybe since Bill Clinton. I mean, we'll be very honest here. It definitely had something to do with Trump. Orange man may be bad today. Sadly, the defense in this post will probably be the crickets. The American people, rightly, are more concerned about buying food and the ability to pay our bills. I agree with that. Let's see what else people have to say. USA isn't really ready for crypto. I'm not. That's a good thing. Okay. Cryptocurrency just opened the door. I don't know about that. They can just print money and just to pay the interest. They can just print money to pay the interest. Duh, a Zoomer would say. Why isn't this headline news? Yeah, that's a great question. Not scary one bit, according to the Dow, hitting 40,000. Let me know in the comments down below what you think. Do we have a huge problem here? I don't know, but I'm not excited to see that interest is now basically our most expensive thing out there, it looks like. Hey, be sure to click one of these two videos up above. The YouTube algorithm gods think that these are the next videos that you need to watch to have an incredible day. And who doesn't want to have that? Click one of these to watch more, and I'll see you on the next episode.